All right, good morning, everyone. Welcome to today's edition of the trading game, Thursday, April 23rd, 2026. And this is the audio edition to the Daily Trade Strategy Briefing. NFA Compliance Rule 2-29C, you all are familiar with this. Disclaimer, past performance is not indicative of future results, so forth and so on. All right, today is the final day of the cycle. Cycle day 3 price is currently above the cycle day 1 low, so we do have a positive 3-day cycle fulfilled, which currently stands at 92.42% historical success. And again, we may notch another tenth of a percent after this one, but still very, very strong. Mark, how's the sound? Any better? Mark was having some issues with the sound quality. Hopefully it's a little bit better, louder. Uh, what does that mean? What does count for me mean? Oh, it's low. It's still low. All right. Hmm. I'm gonna try something tomorrow and see if I can improve that. There's something I was thinking about to try to improve that for you. Yeah, you have full volume. I'm full volume as well. I think what's happening is I have um, on the volume is there's a bleed over because I'm broadcasting in two locations, so there could be a bleed over. So what I may do is I may test it on another computer tomorrow. So it's like a whisper. Yeah. Okay, I got it. I think that's the reason. I think the audio driver is having a difficulty handling both. So I'll try it on the other computer and see if that works a little bit better. So we'll test that tomorrow on Friday for you. The recordings though, I did listen to the recording and the recordings are fine, but that doesn't help you real time. So all right, well let's continue on. We'll see what we can get accomplished here. Today is the final day of the cycle. Again, we like I said, we do have a 3-day cycle positive. Our targets have also been fulfilled. So basically, the range has gone 100% of the 3-day cycle range. So not a super cycle like we've had 3 in a row here, though solid nonetheless. And prices are still holding here near the all-time highs. So still bullish. I think the market, like I said in the daily trade strategy, I think it's pretty much shrugged off anything that's happening overseas right now, unless something truly new develops. But what you had last night, you had a little bit of a kind of a snap down uh, during like the 8 o'clock period. There was a little blip of news that came out, which turned out to be unverified and I guess false. And then they snapped it right back. Okay, that was on the 60-minute bar here that you see, the long tail. But a normal reaction did happen where it came back down and tested the prior low. Okay, that is a normal reaction. So whether it was, a counteraction to that quick, fast drop or not, who knows? But bottom line is we ended up snapping back and testing up back at highs, and now we're back here in the middle. So today, I'm marking this, as many of you know, right, as a wild card day. What's a wild card day for those that are unfamiliar with that? Based, again, this is my term. It is not a 3-day cycle Taylor term. But basically, what I've observed is when the markets have fulfilled the 3-day cycle objectives, then yeah, thanks, Mark. I see your note. Um, when the 3-day cycle has been fulfilled, pretty much the idea is the next cycle is to begin, but we could have, kind of a backing and filling type day again today. I think the market's kind of still waiting for, I guess, the new deadline for the ceasefire. I guess, I mean, the goalpost changes every day, it seems, right, with this. So, but I guess the latest is Sunday. So I think the market's just kind of in this wait and see mode. But regardless of what's happening over there, again, we've talked about the shock absorber effect right over the past week, and I think it's, to me anyways, that's an accurate kind of assessment of what's happening. When something initially happens that's a shock, the markets move, violently because they don't have enough information, and so, shoot first, ask questions later. But as the information gets filtered through, and the read through, and the effects and so forth, then the oscillations of the market kind of diminish. And now it seems as though at this stage that the market now is simply discounting whatever. Yeah, you'll get a headline. Headline risk is still uh, you know always present. Things can snap pretty quickly. You get the headline algos that are on high alert, so you'll get those like happened last night. But regardless, those can still work in our favor if we have a position. So it doesn't necessarily mean they're negative. It's just what the environment is. So you understand what the environment is, and you follow your plan accordingly. And sometimes it will help, sometimes it may not, but that's the game. Either play the game and understand the game, or don't play the game. That's your choice. So we all choose to play. So, um, but it's never a dull moment, uh, and then hopefully we assess the situation, as accurately as we can, and then take the appropriate action at the appropriate times. So very simple, but not it. It's simple, but not easy, as they say, right? If it was, everybody would be doing it. And everybody would be making money, but it seems as though the statistic there still holds that majority of people lose. So somebody has to win. All right, what's our framework here today? All right, well, let's talk about just the overall um, multi-composite day framework. So we're really kind of thinking up here at the upper edge, right, of the multi-day profile up here to the 65, 60, 65 area. Again, near the all-time high, and vice versa back down here, right? 25s. We've seen these numbers throughout this week. And again, you get, a deep spike, right? We have some high volume node a little bit down near the 71s. And we're sitting here pretty much somewhat in the middle around the 50s. My line in the sand today is 71.60. But frankly, it could have been 50, it could have been 40, because the market has traversed these areas multiple times. So, again, it could have been simply this high volume node here around 45s, 50s. Um, you know, six one half dozen of the other, as I'd say, in terms of trying to select what would be the key line in the sand. Many times we actually have uh, dual line in the sands. So one could be here at the 71.60s, right? And the other one could be here where 71.25s. I mean, you can outline that value high right? Value low area for that matter. So, could we choose this volume node? I mean, yeah, so which one? Sometimes it's just a matter of, if the market kind of sustains. The idea for me here is if the market sustains a bid above 7160, so which would be the multi-day composite value high. So if it sustains a bid above the 60s, then we can get, again, further expansion, right? Cycle day 3 being anything goes, wild card. For that matter, if the market rejects this area, so that would be what? Acceptance, right? So that market would be accepting higher prices, moving away from value, the current multi-day value. What is the most likely scenario given the multi-day profile, given this new deadline this weekend? It's Thursday, etc. Uh, the most likely scenario would be to trade within value, back and forth within value, at least at this stage. That's how I see it. Yeah, more sideways, just kind of back within the value zone, right? Multi-day value. So that's probably, to me anyways, the more likely scenario. But again, that's only a scenario. Let the market do, give us the final verdict on what it wants to do. But as we're jurors, we deliberate what the potential outcome could be, and then we plan accordingly, right? So rejection against 60, 65, acceptance if we get back down to, 25, 30. So kind of outside in type of play to stay within the context of the multi-day range value. And then should the market decide to move above or below, okay, then we'll take our, reassess and go from there. All right, so that's kind of the skinny on the minis here. Same thing would apply for the NQ if you're trading the NQ. Again, I'm not going to rehash, the NQ. It's basically the same um, analysis. All right, just change the numbers. All right, and then finally, just before we start again, we're starting right here in the middle, very neutral, and we're just going to have to be patient now. Once again, the market seems to kind of want to work its way back into the neutrality zone, right? I call it the Romulan neutral zone for you Star Trek fans. All right, that's what I call it. So we'll hang tight. Obviously, identify your reference points, prior close, prior highs, all that good stuff that we typically do. All right, so we'll just continue on and we'll see what the market gives for us. All right, that's the skinny on the mini. More sideways, yeah, potential. All right. All right. Also, we are trying to make the charts as clean, as simple as possible. We don't like to have too much clutter on them, but we need to also have enough information for us to make our valid decisions. Also, be sure to send me some webinar ideas that you want, topics that you want to discuss, workshop ideas. All right, send me an email on those. so we can outline a schedule. All right, so just going to be patient. We have an early pre-opening A4 over here on the left. Well, actually, it's pretty much right on the opening, 9:30. Hit the first target quickly, so probably a little bit of backing and filling, little sideways action to start. Still have an overall long lean in general, but we'll wait for a little bit better core structure before we jump in. And again, just be aware there's going to be headlines, risk going on everywhere throughout, and that you can get some quick snaps and traps. For you folks on the crude oil front, opening range, okay, we did trigger off a long two targets filled on the opening range. That's on crude oil. We're waiting here on the ESNQ. This is on the opening range strategy. All right, so if you're playing that, you're long of crude and scaling out, or have scaled out. All right, so just being patient. If you have any questions, let me know. Just want to stay focused on looking for our opportunities. Is it possible to have audio alerts on the D-level money box? Anything's possible. Anything's possible. Even at nighttime, you want to get called out of bed for a D-level money box signal? We'll create a fire alarm sound. Whoop, whoop. All right. All right. Back to the opening range for a moment. NQ triggered long, and ES still waiting for its trigger. And of course, the crude oil is still. So what we can do here on crude oil, since the second target's been fulfilled, we can drag our stop up to the first target, and that will lock in. If it rotates back lower, that will lock in that gain there for um, for that trade. NQ triggered long and looks like ES. Yep, there we go. ES just triggered long. All right, so long on those, long across the board. Let's see if the bulls have what it takes. All right, on that A4, the flip out occurred, right? So when the ATR flips here, we call that a flip out. So it's an automatic. That's a P. Supposed to be a P. Uh, it's an automatic stop out. Right, helps manage the trade. All right, so once the ATR flips, it's no longer valid. So we take a flip out on that and move on to the next one. I have the main chart, John, up with the ATRs. All right, long of so I'm sorry, a discount here. See if they can push above these 59s, 58s, 59s. Come on, brother. Give us some range. Oh, you mean Live Squawk isn't? I thought it was. All right, I'll check with them, John. I thought it was. Yeah, yeah, yeah. All right. I'll check with them. All right, slow grind up. Again, these are the rhythms that we've been having. So just again, long lean here this morning. It's the way the market wants to go. It's the way we're going to go. Let's see if I can do some of this here as well. Yeah, John, there is a recording. Let me see if I can find that. Hold on. Okay, what you want to do for those of you that are participating in the Pitbull Traders, or if you want to view any of the video recordings, okay, here is the uh, Pitbull Traders YouTube channel. Let me post that up there. All right, so you'll be able to view the recordings there, and be sure to subscribe. See, and hit the notifications bell, and then you'll be able to get notifications. All right, so yeah, yesterday's Danny and Lauren's presentation is uploaded there. Good morning, Frank. Frank Casillas in the room. Frank, how do you sound? I'm sorry, how do you sound? How do I sound to you? Am I low? The volume, is it adequate? How do I sound? Okay, loud and clear over on this side. Okay, Frank says it's good for him. Okay. Okay, just checking the volumes across the platforms. Okay, it's clear. Okay, great. Yeah, just checking the volumes across the platforms. All right. Also, be sure if you want to view some of the videos, PTG videos, recordings. All right, let me put that up there as well. And again, you can subscribe to that channel as well. We're trying to get a little bit greater visibility on the YouTube recordings and such. Just trying to increase the visibility. All right, again, scaling out of that discount, and we get to move, just to move higher. Again, keep in mind we still long of the opening range over here. Okay, NQ scaled out of its first target on the opening. ES is long, it has not yet hit its first target, but getting there. And crude oil has scaled out of its position, so we're all good on that. And yeah, so just kind of staying in a long leaning scenario, and we'll take it one trade at a time. Frank, did you get your 3 day cycle um, from Rich? Okay, great, super. If you have any questions about the 3 day cycle, be happy to answer it. We are on a cycle day 3 today, and targets have been fulfilled. So now we're calling today what I call referred to as a wild card day in terms of direction. So we're looking for prices to find acceptance above basically 60-65 area with a sustained bid. That's kind of what we're looking for. And if that were to occur, again, we have some upper targets here, right? That are potentials, right? Same thing for the NQ. But effectively, the cycle has been fulfilled, and we're just waiting for what the market wants to do. Further expansion or not, but it's been consolidating the past couple of days, so in a nice bullish way. And market on close and balances have been to the buy side. What do I want to show? I want to show this. Here we go. All right, Spygate. Okay. While we're waiting for the next trade opportunity to unfold, again, just taking a look at the NYSE over here on the left. The NYSE is the New York Stock Exchange tick readings. All right. So right out of the gate, they were a little two-sided. Okay, and we got some kind of upside push to them, which kind of helped market move higher. Also on the Spygate, again, Spygate is the programs, okay, the buy and sell programs. And you can see here on the opening sequence here, we had a slew of buy programs. All right, we had 9.8 billion in buy programs and 5.6 billion in sell programs. So the net effect of that right now is 4.1 of buy programs over sell programs net effect, right? Since on the opening. So a lot of times we can kind of tell what the, kind of the potential is anyways for the early drive off the opening. A lot of times we can kind of get some sense about that. So between NYSE and any program activity, again, there's always program activity, but I'm always interested in what the makeup of buy sells are in terms of dollar value. So dollar value to the long side on the, kind of coming off the opening sequence of buy program. So that kind of helps give us an early tone, perhaps. All right. I know perhaps many of you don't even consider that, buy programs. But again, it's something that we ought to obviously keep in our calculus. Right? It's not a pinpoint tradable metric. It's more from a standpoint of, kind of contextual backdrop. And going back here to the opening range, just want to just keep updating this. Uh, we have what we call a trifecta. So what's a trifecta? It just means that all three have hit their targets, not their final targets, but have hit targets. So ES now hit its first target, NQ, and of course crude oil. So we have a trifecta day here on the long side on the opening range. All right, so still looking to play long side trades on dips, and we'll keep that kind of posture until there's a core shift to the downside. Okay. All right, just not much more to do here except for just see how this unfolds. might be a lot of dead air today with this grindy action. We're gonna cut the recording off at 10:30 this morning. I have an early meeting to attend about 11:45, so I'm gonna cut the stream off here at the 10:30 mark, so I can prep up for that. All right. So also, remember we created this zone from a few days back here, right? And that is still holding court for some resistance. Remember that was the high volume nodes from I think it was 3 days back, right? And that's why I always suggest when you're identifying kind of some key activity, make some note, or in this case, I drew the zone out that we would be able to reference sometime in the future. And here we are, we're in the future. And once again, that zone is, um, for whatever reason, reasons don't necessarily matter, but well, it's not really a void. I mean, what happened that day was this was a high volume area on the profile as well as this one. So I just created a zone between them, right, as reference. You don't see it on the profile now, right, here, but at the time that day, we had high volume activity on that particular day. All right, rejection back into the range. All right, and we're still basically, again, remember the idea was to sustain a bid. Let's go back to the this chart here. Remember the idea was to sustain a bid above 60-65 zone. Okay, and we got some wicks over here. All right, so we got rejection. All right, so yes, so it had a long bias, up into that area, but again, we still needed to see that area continue to have a bid. All right, and of course, it is not. So we got wicked back down. So back into the range. So we use that area once again now as new area of potential resistance. Should it retest back up there, and then look for a failure. Right, and again at this point, anything goes. We can get a rotation back down all the way through. All right, lastly, we'll conclude the opening range here since we got stopped out on the trailers. All right, so crude oil had already ran its course. ESNQ hit first target, stopped out on the trailer, and that completes the opening range sequence. Trifecta sequence, nonetheless. All right. VWAP is our next reference point. If you're looking for a level, about the 50s. And our 60 line in the sand, plus or minus 5, is holding quite well as a reference as well. right, just kind of sitting here in the middle. Slight lean change, but not really a structural break. So I'll still call it more of a neutral to slightly negative. No, the audio is still here. I'm just not talking. I could put some music on in the background, but yeah, no, I'm just not talking. There's nothing to say. Nothing to say. Yeah, I'm still here. Just there isn't really much to say here at the moment. Y'all have audio now? Should have audio. Oh, okay. Oh yeah, I had updated the chart display, so I guess that kind of kicked out the audio. Yeah, you didn't miss anything though. I wasn't really saying anything. My approach is I don't really want to jibber jab unless I feel as though there's something meaningful to say. I know a lot of these other players out there, they're just jib jabbing all day long. Um, Jib jabbing distracts myself unless it's something that I want to, something that I want to point out. But good trading really is a lot of sitting and waiting and watching. You're learning that daily. Yeah, there's a lot of just sitting and waiting. Usually when I'm off the mic, you don't hear it now because I don't have it on, but when the mic is off, I have music running. All right, just kind of slugging and chugging in here. All right, you're just sitting quiet here in the middle. Like I said earlier, there's probably going to be a lot of dead air today in the recordings. All these dips that are occurring are fairly short-lived. All right, right down to the VWAP zone. All right, buyer stepped right back in. No follow through. So what you want to see a lot of times, what you're looking for is if you get a kind of a move down into an area, right, and you get kind of that bounce, you got to see that follow through, right? You know, we had a premium here that did trigger. Obviously, it got stopped out there, right? There was just no follow through. All right, so maybe some trap buyers here, they kind of forced down, right? And then just no follow through. So again, it's you know the initial impulse move up or down typically is the hardest to identify because it just in most cases it comes out of nowhere, you know, so to speak, right? Where somebody's just initiating that pretty hard, right? And so I think in most cases, most everybody will obviously miss that, and then they're waiting for, you know, the follow through, right? So, and that's fine. You know, you know, you're anticipating, you're looking for that follow through, but this is the decision point, right? Is actually some follow through unfolding? You know, again, trying to find the evidence of some follow through, and then when that doesn't follow through, you know, when there's no evidence of it unfolding, again, whether you're looking at order flow or whatever you're looking at, we're anticipating some follow through, but when it doesn't develop, if it develops, it's going to develop fairly quickly. Yeah, in most cases, you know, a retracement and then follow through, all right, happens fairly quickly. If it starts lingering like it has here, and then kind of starts even showing a little bit of, you know, pre-bull stacker activity, right? And then the CCI gets back above zero line, you got to be thinking that's it. It's more likely not gonna go down, right? So if you had taken a short here, maybe that would be a decision to say, you know what, let me just, you know, as the saying goes, fish or cut bait, right? So just get out of that, reassess, because so that's kind of the anticipation, right? Is you get an impulsive move, you get the retracement, and you're really looking for another follow through impulsive move. So love when you explain price action this way. It's gold. Do that as a webinar. It's difficult to do it as a webinar. I mean, we can put examples out there of that. But again, we can add that to a webinar kind of discussion. And that would be a discussion where it would be kind of a Q&A, right? Yeah, that's why I'm recording the sessions as well now. All right. So, you know, and again, I'm only recording, keeping an archive of only the most recent 5 sessions. But yeah, it's good to review, because there are little gems that are unfolded. And the reason why is that because when I'm reading the market, when I'm viewing the market like this, I'm thinking about this in real time. When I do a webinar, I have to actually prepare that subject, okay? And it's difficult to kind of, you know, pick out those kind of pieces, right? Yeah, you can replay the market itself, pick a day, replay it, stop along asking, right, asking what you're thinking, and that's important, right? That's part of whether you want to replay these sessions or replay the market and kind of be your own self-coach and saying, okay, what would I be looking for here? What would be the questions I'd be asking? What am I reading in the market? Those type of things, you know? Yeah, exactly. What would I do? Why would I do that? Doing it as a group can be helpful. All right. So we can kind of do a review like that, kind of a step by step, in a workshop type of thing. So just pick kind of any day, randomly. Yep, training sessions. The idea about picking them randomly is I don't have any pre-preparation. You don't have any pre-preparation, kind of walking through things together, you know. And again, it's not about being right or wrong on your assessment of what you're seeing and how, it's more the training of asking various questions. What can we identify in the current action? Uh, Kind of the step by step like that. So yeah, we can do something like that. I don't recall ever actually doing that. We've had Q&A sessions, but as a group, I don't recall doing something like that where we just kind of randomly take a day and then kind of walk through it. So that would be a cool exercise. Yeah, so let's do something like that. Let me see how my schedule looks over the next week or two. Trying to carve out some times that have been difficult lately. Did I do a webinar on that? It must have been a long time ago. Then I don't really recall it. But yeah, we can all do that stuff. That's cool. I mean, if you're a purely mechanical trader, let's just, I don't have much time here. I got another 5 minutes, but if you're purely mechanical trader, all right, what that means is you've already done your work, you've already done research, and for the most part, you're just, letting either the ATA or, you're just waiting for that particular signal and you're just taking it, and there's no more thought process to that, right? Not to saying there's not a thought process, but you're not evaluating every kind of move in the market, that type of thing, or movements in the market, right? But if you're more discretionary, I consider myself a discretionary trader with computer assistance, kind of a hybrid, because I use the auto trade, but I'm also manually trading as well. So to me, an active assessment of market activity is just part of what I do, always has been, right? And that helps me determine, what side of the market, that I want to primarily, be focusing on. And I don't mind missing trades. People get upset when they miss trades. I don't mind missing trades because I'm of the viewpoint, I miss one, there'll be three more on the way. I just got to be patient and wait for them. So, but some people get upset they have to get every single trade. Well, that's fine if that's their makeup. I have no problem with that. But, you know, the idea is you just maintaining, your discipline to whatever trade plan you have, and that's what kind of essentially what it's all about. So, which one is that? Wow, 2014. That's what I'm saying. We're talking what, 12 years ago. No wonder why I didn't remember it. Well, it was probably valid. It's probably valid today as it was back then, right, Rom? Would you say? Yes, sir, it is. Okay. So that's a testament, anyways, to the fact that everything that we've been doing here for all these years is valid today as it was when we originally, discussed them and outlined them. If they didn't work repeatedly over time, you know, they they wouldn't be useful to us. But the fact of the matter is, they are. And so even though it's an old video, the concepts in the video is what matters. All right, let me grab that and then post it up here as well. It's an educational video of the highest order. Okay. All right. I'm going to be heading out here, stopping the recording, the stream in about a minute, so I can get prepared for a 10:45 meeting here. All right. So we will be back tomorrow, same time, same channel. All right. And we shall see everybody again tomorrow morning. Hope you have a rest of good trading day. Keep your stops tight and your targets wide.